So I hadn't planned to do this video for already quite some time. And this is why for this occasion I actually created a small portfolio about 2 months ago to show you guys that you can actually grow a small portfolio with the right strategy. In this video I will tell you how to do this and what you should be aware of if you have a small portfolio and you are trying to grow it to whatever the number is. This is not investing advice, this is just me documenting my own experience. So your investing strategy should always copy the investing style that you have. But what I really like with a small portfolio is the ability to be aggressive with your investments. You don't want to lose this advantage because there are two outcomes that can happen if you're aggressive with your investments. You will have high growth with your aggressive investment, or you will lose some of your money. And I was reading many books about stock market, and in the last book that I was reading, Uknown Market Wizards, I think they hit the nail on the head, and with this approach that if you are losing money early on, it will be your most valuable learning path. So try to think about it this way. Obviously, it would be better to avoid losing money, but losing early is the best teacher that, if you are serious about investing in the stock market, what you can actually find. So either way, I think you are going to benefit by being more aggressive at the beginning. But again, this is something that puts you in a very uncomfortable spot, so consider not doing it if this is not really who you are. Also, always make sure that you follow your own due diligence, because losing on someone else good advice is far worse than actually losing on your own bad advice. So don't risk also more money than you can't actually afford to lose. Last but not least, don't risk more money than you can't afford to lose. And with that, let's take a look at what I think is the best way to grow your small portfolio. The strategy that I was using on this small portfolio is trading SPACs. SPACs are by far the best opportunity in 2020, and it's going to be in 2021. There is so much dump money in this space right now that you would be really surprised. If you don't trust me, just follow some groups on Facebook or Reddit. People asking the most basic stuffs will tell you that they have made 50% on some stocks. They literally have no idea how they made it, but they made money. If the stock market was called casino in 2019, then in 2020, SPACs are the casino royale. And you can take advantage of that just by being one step ahead. There are many strategies that you can use with SPACs. I personally didn't like to chase the stocks after the merger and go with the crowd, so I choose a little bit different strategy. I invest in a pre-announcement SPACs that are still looking for target, and this allows me to be early enough in SPACs just to choose whatever I want to do with the SPAC, either to dump it or either to keep it. This strategy has one big benefit. You only need to follow the news on your SPAC, which you can do simply by tracking your stock price and sign up for email reminders on SEC website. That way you are going to have every news which is considered important with your SPAC that you are investing in. You don't have to do almost any DD on the stocks, which actually feels terrible when I say that, but most of the part this is true. And now here is why it is important not to overspend time on your small account. By the way, I am not saying that you shouldn't spend time on your investment. The problem is that your challenge with a small portfolio is that, let's say the average return of S&P 500, you could have about 6% annually. A very small percentage of people can beat that, right? So you can count with 6% from, let's say, $5,000 account is $300. So it doesn't really work out for you to exchange a $300 for 1 year of sleepless nights and researching your investment. So this is why I think that the most small accounts below $20,000 doesn't really make sense for most of the people. Because if your account is going to be below $20,000 level, it is barely going to be worth your time to invest in the first few years. And at that point, the only thing that you are really getting from an investment is just experience. The better solution, in my opinion, would be to actually exchange your time right now for the money and come back with, let's say, $30,000, and then take your time and invest your money, expecting, let's say, a $2,000 annual gains, which I think should start to be worth of your time. So here's what I mean by being aggressive with your investments. I don't think that the smart way would be to invest in dividends or something that is considered, let's say, very stable. What you are looking for is not necessarily volatility, but some movement or maybe some edge which you have. If I can recommend you to read a book or listen to an audiobook, go with Uknown Market Wizards. That is a perfect example of having an edge over someone else. This book will easily show you that those who beat the market always had a strategy, always had an edge, and they were consistent with it. And I believe that my edge is to know about specs inside out. My edge is, for example, the spec tool Megasheet that is helping me to find good undervalued spec. I do my research, I buy, and then I wait. I can wait on average up to maybe 3 months or maybe 6 months, but then I'm rewarded for this waiting period. So I do know my strategy and I never change my strategy. In some cases, if specs has a good time, I am rewarded even along the way. I bought specs that didn't find a company to merge with and the prices went double or triple the price. So in my case, I am buying warrants because they give you leverage. So with that, what I said all before, this is a good thing. Leverage means more risks, but also it's giving you a higher potential. It is very similar to options, but options have a very specific time frame, while warrants are allowing you to wait with your investment until you are ready to sell. So in my opinion, warrants with specs are much better than actually stock options. If you are wondering what warrants or specs I would buy right now, you can either join my Patreon group or simply just check out the stock SSPK, which is merging with Weedmaps. I think this is a phenomenal company that is going to be noticed soon. Also, all my Patreon members gets the access to the spec Megasheet, where you can find 364 specs and all their data. If you are starting with your small investment portfolio today, don't throw your money at the first stock that you will see. Get a high conviction trade. Split your money into 4 or 5 investments. Just make sure that what you invest in you can explain to a child. At least you will be able to tell yourself why it didn't work. Probably the worst that you can tell yourself is that I don't know why I made or lose money on that specific trade, because you can be lucky just so much. By the way, if you are one of those who are asking yourself, this guy probably made like 10 small accounts and picked one of his accounts that actually made some money, I totally understand where this is coming from. And these are my 2 trading accounts actually. I can show you right now on the screen. Both have similar 90% returns. One started at 6.5K and the second started at around $23K. So you can totally replicate this on a bigger accounts up to, I think, hundreds of thousands of dollars. Okay, these were a few of my tips how to grow a small account to maybe double, maybe triple, maybe quadruple the size. And with that, thank you for watching and see you guys next time. Don't forget to subscribe. See you guys next time.